So we could be just like literally 5 hours away from the end of the bear market, according to what I'm going to show you in this video. So that is going to be really, really exciting. Stick with me for that. Before I get into it, I want to talk to you about this short-term trend. Bitcoin has been hugging this resistance level at $28,700. We did get a fake out above. We already knew about that, and I was anticipating Bitcoin to come down to this support level, but we haven't done that. We actually found support at the mid level, which is one of the levels that I kind of spoke about, and I was kind of surprised that we found good enough support off this level, but whatever, it's cool. It's actually really good because it means that we are just right at that resistance level. Now, at the same time, this is an interesting Friday trading session for the market because Ethereum's doing well. Okay, we would have expected that. Money's flowing into altcoins as well. If we take a look at dominance, you know, we are seeing dominance take just kind of falter a little bit. You know, it was a little bit higher, now a little bit lower, whatever. No big deal. But on the same day, guys, take a look at what's going on with gold. We're still looking to push higher. With the dollar is also making a very small move. Now, all of these are small moves, but it's just interesting to see on the same day. S&P 500 as well, right? We've got all of our markets kind of looking pretty bullish, even ones that, you know, generally should be having an inverse correlation, right? I mean, if the S&P 500 is looking strong, if Bitcoin is looking strong, if gold is looking strong, we should be seeing the dollar index looking weak, right? That's generally what we'd expect, but things are kind of being flipped on their side a little bit. I don't think this is anything to read into. People are, I think, taking this kind of thing out of context. Sometimes the market just, you know, ranges, right? And things just happen. I don't like to read into these things too much. It's not like you're going to be missing any particular, you know, huge bit of very, very special information, you know, if you don't pay attention to this kind of thing. You know, more likely we're just trading sideways and the market's just chopping. It's just doing things to wreck your mental, you know, headspace, to be honest with you guys. So now that you're aware of that, hopefully you can insulate yourself from problems like that, for sure. But still, no, looking really, really good. I mean, S&P 500 right here, you know, at 4,100 basically is again, I mean, this is the kind of, you know, key resistance area that I was looking at for quite a little bit on this YouTube channel with you guys. If we take a look at the main chart that I had drawn on here, you can also see that I've had this area, you know, lined as resistance up here at, you know, kind of 4130. So this is something that I'm going to be keeping an eye on to see if the S&P 500 does get another rejection here. I do not want to see a rejection here. I want to see S&P 500 blast right through this level. If we get a rejection here, then okay, fine, maybe down to support here. But, you know, really, I don't want to see us ranging in this area for too long. I don't know what the probability is of the S&P 500 blasting through this resistance area, but I do know that on the weekly time frame, we've had a brilliant trading week here. We've only got an hour and a half left on this weekly candle for the S&P 500, and you take a look at the last 2 weeks of price action, they've all been very, very bullish. So the S&P 500 is looking pretty strong. And again, the reason this stuff is important for Bitcoin is if we're getting traditional finance looking strong, well, then that generally has some kind of spillover for Bitcoin, right? Because people are willing to take a little bit more risk. But where all of this actually gets a lot more exciting is here on the BLX chart. Now, this is the longest term view we can get of Bitcoin's chart as far as I know, and this actually stretches all the way back to 2011. Now, what's very, very interesting about this is if we actually change the formation of these candles to Heiken Ashi candles, this paints our candle slightly differently. Now, you don't need to understand the intricacies of what this does, but you can Google it if you're interested. In short, it kind of averages out price action so that if we kind of compare this to what we had previously, you know, little moves like this won't really look like the trend is pausing. It'll just look like the trend is continuing in a slightly less aggressive way. So take a look at this. You can kind of get an idea of it here. Where I mean, the candles open and close in the wrong places, right? Because they're actually, you know, the way these candles are calculated is slightly different. But what it does is it paints really nice ranges where we can see, I mean, you know, just very, very clearly when we're red, we're bearish, all right, and when we're green, we're bullish, right, with limited exceptions, right? An exception right here, an exception right here, with limited exceptions. This is actually very, very useful to tell us when we are in an uptrend or when we're in a downtrend. And what's very interesting here is that we've now had 3 bullish candles in a row, and of course this candle closes within you know, just a matter of hours at this stage, right? Which is really, really exciting, because what it could mean for the market is that this is a new bull market, a new bloom that we're in right now. And what's particularly interesting about this is it's actually quite a hard idea to accept. It's a hard theory to swallow and be okay with, because we've been bearish for so long, right? So we don't like change as humans, but we also find it hard to admit that we could be in a new spring, that, you know, things could be turning around and getting ready to bloom and just look beautiful for summer and everything like that. You know, and that's something that I want you guys to keep in mind as we go on through this video, because a lot of people are going to have a hard time digesting this kind of idea. But if we take a look at some of the time frames here, each of the times that we were in these downtrends, we had more than 12 months, each bar here representing 1 month of price action, more than 12 months of trending down. Quite horrific, strong downtrend here actually on the Heikin-Ashi candles. That looks pretty bad as far as, I mean, just relentless sell-offs. You know, here we had 14. You know, put this in context of days. This is nearly 500 days. This is 425 days, and here nearly 400 days. So we're kind of roughly on par with similar time frames for our bear markets before. This is actually surprisingly the shortest one. Really didn't feel like it, but it was according to this data. And if we take a look at some of the fake outs, here's what's interesting is that, you know, sometimes we had our trend change and, you know, we just got more green candles painted, you know, on a couple occasions here. And these are, you know, for the context that we're discussing here, I think it's appropriate to call these fake outs because when we're, you know, when we've got red candles, this is when we know the market is bearish. When we've got, you know, green candles, that's when we know the market is bullish. So you know, I would consider this to be a fake out. We had a couple, nothing crazy. We didn't have anything back in 2018, 2019, but we also didn't have anything back in, well, our current bear market that we're in right now. So you know, that's somewhat interesting. You know, obviously this bear market lasted the longest time, but we also had 2 fake outs, each of which lasted 2 months. So that's 4 months potentially, you know, of trending down according to the Heikin-Ashi candles that we did not have, you know, which might be one of the reasons why this was shorter in terms of time, right? If we go back to this chart, this downtrend has only lasted 400 days compared to 485. Well, if we remove 4 months of price action from, you know, 485 days, we're already down by 120 days. So the time frames are actually very much on point, which is also interesting to take note of. And if we draw these curved lines, which, guys, I need to pause here and just make it very clear to you that I do not like curved lines on a logarithmic chart. These are, you know, some of the easiest this is probably the easiest form of TA that you can just manipulate and like basically draw any conclusion you like, which to me isn't very objective as far as analysis goes. But these curved lines you could have drawn for a very long time, and it's also just interesting to make a point. I would not base my trades around ideas like this, but for a bit of contextual awareness of where we are, this can be pretty useful. Can be is the key word. And so what we have here is, you know, 2,500% pump here, 670%. And if we get up to the top, you know, curved line right here, this gives us a speculative target of $105,000 with a 330% gain from our current price. So again, absolutely crazy stuff. Very, very cool indeed. You know, and definitely representing, you know, just some really, really nice moves to come. Now, like I said, again, this is not the kind of thing that I'd be basing my trades off. I'm more interested in the short-term trend. I'm obviously still in that long position that you guys know me. I've been talking about quite a lot on this YouTube channel. $180,000 profit. Very, very cool indeed. And if you guys want to trade on the same exchange that I'm using, you can check it out with the link in the description down below. To literally just head on down here to the exchanges I use section. Bybit is the one that I use for this trade with a $30,000 bonus that you can get, which means that when you sign up using this link, you can get up to $30,000 just completely free deposited into your account. You can trade with it. You can throw that money into the market. If you make any profits, you can withdraw it. OKX giving you up to 20k in rewards as well, with very good trading fees as well, by the way, and Prime XBT up to $7,000. Literally just whatever you deposit, 7% comes back to you as a deposit bonus, which you can throw back into the market and trade with. So very, very cool indeed. Now, taking a look at some of these other charts, this is also potentially interesting. I don't look at the stock RSI too much, but when we do see the stock RSI bottoming, we have typically over the last couple of months, we have typically seen when the stock RSI bottoms that Bitcoin is ready to rally up. Now, it might not be instant, it might take some time, and over here, the RSI was also in oversold territory for quite a bit of time until we eventually got that lift off. So it's not perfect. That's why I don't like this indicator, but it is right now showing us that Bitcoin is poised in the same position right now. It is poised to be rising up, you know, in the same way that we've been rising up, you know, a couple times previously. So this is an interesting development. Again, it's not something that I take hugely into account when I'm making my trading decisions, but it is still a good sign, and that's something that I'm going to keep an eye on. The thing is that yes, okay, today it's the stock RSI, but in a couple days it could be a different indicator. It could be a different kind of sign of confirmation that this market is ready to move up. So we've got one thing right here. We've obviously got quite a few other signs that the market wants to break. So my job here is to kind of keep an eye on these things and just watch these things develop. If I started to see that a lot of indicators are moving in this direction of indicating that Bitcoin, could be, at the tail end of its consolidation, maybe, ready to continue its uptrend again. If I start seeing a lot more indicators in addition to the RSI, the stock RSI showing that as well, that is where these things start to become a little bit more interesting. And if we take a very long-term look at what we're looking at for Bitcoin here, a move up for Bitcoin here is going to put it directly into that resistance area in the low 30K range. But now that we've consolidated for quite a while, if we take a look at how these kind of moves have looked so far, they've been, let's just move back to normal candles. Our moves have been pretty strong, right? So if we reproduce, this kind of move, we've already looked at this a little bit, but if we just kind of draw this from low to this high right here, and then kind of give ourselves another breakout point that might be, let's say it's just at the bottom of this range, right? Just to be nice, that still gives us a speculative target up here of $40,000. So all roads seem to point to $40,000 right now, at least, mid 30s. There are a few things that are a little bit more concerning. There are just signs that I've seen which could indicate we're at a top. And, the big thing, other than any other analysis I can give you, is that this is, a macro area of resistance. Bitcoin is about to end its weekly candle, as far as weekdays go. It's about to end its monthly candle. It's about to end its quarterly candle. In fact, many of you guys watching this video are probably watching it in April, and so we're in a situation now where we're at the end of a month, we're at the end of a quarter, we're at the end of a work week, and Bitcoin is sitting at resistance, right? So this is like the worst combination of like timing and price areas that we could possibly be in, right? I mean, this is actually quite pretty, I don't like using the word bearish in this, but it is bearish in that sense. But the flip side is that generally we find these reversals on days like this, on pivotal days like this, monthly close, quarterly close, and so on. If we don't get it, if we manage to stick around here for another day, another 2 days, maybe until next Monday, which is only 3 days away, then I think we could find Bitcoin in a really exciting position where the bears have had a really big opportunity to send Bitcoin down and they didn't take it, which might lead to a new window of opportunity opening up for bulls. I actually used the exact same thesis to trade Bitcoin back here in the bear market of 2018, 2019, where if we take a look at this, the 1st of April, Bitcoin was sitting at major resistance. It was, again, it's actually the exact same situation that we're in right now. We're just 4 years down the line where we're sitting exactly at a resistance level. It is the end of a month. It is the end of a quarter. We're in a slightly treacherous trend, but we didn't manage to get sent down from the bears, which is why the very next day before this pump, I decided to enter one of the craziest long positions of my life and rode this long all the way up to here, which doesn't look like much, but this was a very, very nice kind of 36-38% move, and I traded that on 10x leverage, which means that I made a very similar gain to what I'm in right now, where this gain is also around 300%. I made about 380-400% on that trade back in 2018, 2019. Very, very cool trade. This trade that I just spoke about, this trade that I'm in right now, were both shared inside of VIP. In fact, every trade that I've made since then has been shared inside of VIP, and if you want to get inside, you can do so by following these steps on screen. And also, keep in mind right now, we're still running that 50% discount, so if you want to get inside, get access to all of this cool stuff, then follow again these steps on screen to get yourself inside that group. Definitely the right time to be in. So I just find it interesting that we are at this kind of same pivotal point 4 years down the line. Another instance of history almost rhyming, to be honest. I mean, statistically, this is obviously just very likely to happen. Like if we just keep rolling the dice, eventually we're going to be at resistance on a monthly, quarterly close. But I don't know. I think there's some element of being poetic here. If we hold this level, hugely bullish. That's one of the big tests, really. I mean, sitting at such strong resistance and consolidating in and of itself is extremely bullish. So I like what I'm seeing. I really like what I'm seeing. I've been bullish on this market for a while. I've been bullish on this market since we were at $17,000. I'm still bullish at 28. Cautiously bullish, I should say, but still bullish nonetheless. So that is very cool indeed. These setups on the chart, this long-term Heikin-Ashi thing, it's not something that, again, that I want to read into too much. It's just too long-term. But these fake outs that we had previously, 2 candles here, 2 candles here, 2 candles here, we are now on the 3rd candle that's about to close. So that still requires, paying some attention to, right? In my opinion, this is still worth paying some attention to, because even though it's a long time frame, it's a little bit, for me at least, a little bit wishy-washy. What's very, significant is this: we've had a very long-term downtrend. We've now had 3 bullish candles. I mean, all it takes is a push above 30K, and this is going to look like a really fucking bullish, convincing chart to me. So those are my thoughts. Those are my thoughts on what I'm seeing right here. I want to know what you think. Let me know in the comment section down below. Jump on Bybit if you want to trade on the same platform that I'm using. You can check it out with the link in the description down below. These are the steps to join 𝐿𝐹𝐹𝐿𝐹𝐹 VIP. All you're going to do is head on over to the description. Bybit link is over here, and if you want to join my VIP group, you can click on the /gold link here, or just click on this link directly to text me. They're both basically the same thing. So there you go. Really hope you've enjoyed this one. You know what to do if you have. I'll see you all in the next one. Cheers.